Hey everybody, welcome back to another episode of Ryan Makes Sense. If you're new here, welcome. I talk about personal finance, investing, and chart analysis. Today we are going to talk about gold. Gold. So if you're not aware, gold is nearing all-time highs. We have several cup and handles on several different gold stocks, gold companies, and I thought, why not review gold stocks that we could probably consider thinking about looking into? So, without further ado, we're going to go on to the best website in the world, finviz.com. We're going to look at just the industry equals gold, and we're going to see how many gold stocks are in the stock market. We will whittle that down and we will individually review gold stocks. We're going to look at their charts. We're going to look at their data points, their financial data points, what their sales, income, debt, etc. are, if they're miners, if they just store gold, if they transport gold, who knows? Let's just dive in and go from there. All right, so we are on finviz.com and I went to the screener portion of the website, which is right here. I'm circling it. And I clicked all, and we're looking at industry is gold. So with that, we have 45 stocks. We can see Canada, South Africa, USA, South Africa, Canada, excuse me. So the purpose of today's video is going to be looking at gold companies within the USA. So what we're going to do to bring this down from 45, we're going to go to country on the top right, which you guys cannot see. So country right here, and we're just going to go to USA. And that has brought us down to 13 results. Let's go ahead, whoops, 13 results right here. So let's go ahead and review these individually. Let's look at the chart. Let's look at the financial data points. How much money are they making? How much money are they losing? How much debt do they have? Have institutions been buying? Have insiders been buying? Etc., etc., etc. So with that, let's go ahead and just open all these up and dive right in. All right, so the first stock we have is ticker symbol CDE, Coeur Mining, and I'm just going to adjust my screen so we can see the charts. All right. So this looks like a nice cup and handle right here. We have the cup, and it's now forming a downtrend on the handle. Let's take a peek at all of their financial data points. We can't really see it right there. So right about there is a good spot. Yeah. Okay. So the company makes 785 million. They lose 78 million, which is fine. They do have some debt, but they are paying that debt off. The forward PE right here that I'm highlighting, that my head is in the way. The forward PE does indicate that this is going to be overvalued in the future, which means it's really undervalued right now. Earnings per share next year is going to be 211%. Earnings per share over the past 5 years is negative 20%. So not that great. Sales over the past 5 years are at 2%. Insiders bought a little bit. Institutions have bought some. There are 276 million shares float. And yeah, let's plug in to see what this stock could actually be worth. So what we're going to do is we're going to take the sales plus the income. So right here it'd actually be minus because this is negative. Then we're going to divide it by the shares float, and that's going to give us our conservative price target. And then what we're going to do from there is we're going to incorporate the cash and the debt and also consider the market cap. If the market cap is over 1 billion, and we can see right here the market cap is 1.34 billion. So let's go ahead and just do that right now. So we're going to go 785.6 million minus 78.1. So 707 million after income, and then we're going to divide it by 276.06. That gives us a fair share price of $2.56. And when we look at this chart, we can see that the price did get down to around 280. So it would have been a good buy down here. Or if we were in this earlier, it did get around 250 back in July of last year. And again, if you would have bought in July last year and held it all the way through this craziness that we've seen, with overseas stuff happening, you would be up less than 100%, which is fine. So we're at a fair share price of 250. But let's add the cash and remove the debt. So let's just take the 258 and note it down on the side. Okay, so insider purchase $58,000 worth and almost $30,000 worth right here. Not too insane. So we're gonna go to the balance sheet. They have 61 million in cash. Total assets 1.8 billion. Total liabilities 957 million. Total debt is 515 million. So that is not that great. So let's go ahead and start from top to bottom again. So we have 785.6 minus 78.10. Sorry guys, my head's in the way. So I'm getting the minus for the 78.1 because this net income right here is negative. So that's going to give me 707.5. And now we're going to add the cash, which is 61.46 plus 61.46. And we're going to remove the 515 million, which is going to be 515.93. So we're at 577. And if we include the market cap, so we have to do it longhand now. So we're going to do 577,390,000, 577,390,000. Yep. Plus 1,340,000,000, like that. So we're at 1.9 billion after everything's said and done, and we're going to divide it by 276,600,000. So this comes out to a fair share price of about $6.93. We can see the cup is at 425. The low is at 288. So to calculate the cup and handle, we take the top of the cup minus the bottom of the cup, get that value, and then we're going to add to the top of the cup. So remember 693. So we have 425 minus $2.88. So we have 137, and we're going to add that to the 4.25. So around a $5.62 price target. I think that is doable. Gold is, swinging around to the upside on the longer term charts. So once gold starts moving, or any commodity, could be oil, could be gold, cryptocurrency, etc., commodities, anything really, it'll just take off and it'll escape reality, and it's just going to be momentum at that point. So, I think a conservative price target is around $5-6. This company is not the healthiest, given they have 515 million in total debt and their income is negative. So yeah, they are slowly paying off their debt, but I think there might be better ones. And let's just see what institutions are doing here. It says institutions own 76%. However, let's not fact check, but let's see. So if we go to Fintel and we go to the very end of the site and we do CDE. So FinViz does have a little bit older data. Fintel does have up-to-date data. So we can see even here, Coeur Mining right here, confirming it's the right stock. It shows that institutions own 66%. So institutions, even though gold is rallying, institutions are selling this one off. Probably because it's not the strongest position gold stock. So if I'm ranking gold stocks, this one's probably going at the bottom. But let's go ahead and move on to the next gold stock. So CDE, Not the best, maybe the worst. We'll see. All right, the next gold stock is CMCL. And okay, I need to find a spot for my head, man. Right there. So this one's just been in a huge uptrend. If you would have purchased this at the low of 831, you'd be up almost 100%. But let's see if this one's makes sense. Okay, so we see some really good things here so far. You guys can see my screen. Okay. So they make 135 million. They have positive income of 17 million. They have little debt, no long-term debt, which is good. It is currently undervalued with 12.15, and the forward price earnings indicates that this is going to be undervalued in the future. Earnings per share over the past 5 years, 9.6%. That's great. And sales over the past 5 years, 15%. So that lets us know that this company has been producing over the past 5 years. They've survived the great lockdown. We do see institutions are selling here, but we will fact check that because this company looks really healthy, and I would be very surprised if this one did not have any more purchases. Shares float is 11 million, meaning this stock could be undervalued. We're going to do some math here. And gross margins are at 46%. That is amazing. So this looks really good to me overall. Analysts have this price target at $14.44. Let's do some math here, similar to what we did on the last stock. I do want to call out that the market cap is 295 million, which is not over 1 billion. So we are not going to incorporate the market cap into the price of the stock. And I guess I'll just show you what I mean by that. So let's do our very just conservative number first. We're going to do 135 million plus 17.9. So that's 152.9 million sales income. And then we're going to divide that by the shares float of 11.7. So that gives us a fair stock price of $13.06. Target analysts have it at $14.44. And the current stock price is $16.79, which means it's a little warm in terms of pricing. The company is guiding for negative growth this year, which was this year represents 2022. Once we hit June of 2023, this EPS this year is going to reflect 2023, but as of now, it's still 2022, I believe. And then the earnings per share next year represents 2023. So they're saying they're going to lose 33% this year. I don't know why. Maybe institutions are truly selling this stock. I'm not sure. But now let's put this $13 aside and let's go incorporate the cash and the debt. So we're going to start all over again. We're going to add the 135 mil plus 17.9 mil. And we're going to exclude the market cap because it's not over $1 billion. And we're going down here to balance sheet. They have 6 million in cash, which is not a lot. So plus 6.74. All right. Total debt, 12.6 million. So minus 12.6. So 147 million. Total assets is 235 million. Total liabilities is 64 million. So that's a good ratio to have. That's about 6, 12, 18. That's like a 4-to-1 assets dwarfing liabilities, which is great. So now if we take the 147 million and we divide it by the shares float, which is 11.7, it's a $12.56 stock. So again, it's a little overvalued if we're looking at that. But again, look here, it's just momentum. Like it once gold gets going, it's not going to stop. So, if this is going to create a cup and handle, it'll probably go up to here, $23, and it'll come back down to 17, and then it'll start another leg up. So do with that what you will. This is not advice to buy. I don't think I would buy this. But this is a semi-decent stock. They pay a 3.34% dividend as well. I would like to see them take that money and do something with it. So I like this stock, but Yeah, I'm just gonna note that down really quick. So CMCL, 3.3 dividend, and fair price is around $13. Okay, so it's a little bit overvalued right now, but like I said, once commodities or really an industry gets going, it's hard to stop the momentum. So that was CMCL, not a bad stock. Let's move on to the next one. All right, we have Dakota Gold Corp. Oof. Oh wait, CMCL. I have to look at here. CMCL. Let's go back to CMCL really quick. I want to go back to CMCL because I just want to see if the institutions are truly selling. So institutional transactions negative, and it says institutions own 26% of the stock. However, ooh, it's down to 9.2%. Ouch. Ouch. That's a little rough. Caledonia Mining, yep, that's correct. Caledonia Mining, yeah. So institutions are dropping that one like a rock. Okay. So pretty nasty there. Let's move on to ticker symbol DC for sure now. So this company has no sales, which is a red flag. They have no debt though. Okay. Institutions are buying and it looks like they're adding. Shares float 16 million. They have no gross margins. They have a ton of cash. So what's going on? Let's see what's going on here. Dakota, can you guys read this? Yep. Dakota Gold Corp engages in acquisition, exploration, and development. It primarily explores for gold deposit. The company holds 100% interest in the Blind Gold City Creek, Tinton West Corridor, Ragged Top, Poorman, Anticlane, Maitland, South Lead, Whistler Gulch, and Cambrian unconformity properties located in Homestake Mining District, South Dakota. It holds an option to acquire 100% interest in the Barrick option and the Richmond Hill option project situated in. Okay. So this company has no sales. We have the CEO selling 170,000 shares. We had the CEO buying at $3.38. 20,000 shares, not that much, and then selling 170,000 shares. I'm sorry, but I don't think I would consider investing in this one just because they don't have any sales. Again, we want to invest on facts and not dreams, and this one just seems like a dream. Like, are they ever gonna make money? I don't know. They have no sales. So this is by far the worst gold option we have discovered so far. So we're going to go ahead and move on from Dakota Gold. Let's just see how much institutions own really quick. DC. All right. So it says institutions own 23%, and it's showing 28.8% here. Let's see who the bigger holders are. We have BlackRock adding Metropolitan Life Insurance, Europac. Where's Vanguard? Yep, here's some Vanguard. Yep. Whenever there's BlackRock, there's Vanguard. Royal Bank of Canada owns a bit. Credit Suisse. Euro Pacific Asset Management. That's Peter Schiff. Good for Peter Schiff. So what does Peter Schiff know about this that we don't? I don't know. I mean, could this pump up for no reason? Yeah, it's a $16 million or a 16 million float. So someone could really influence a stock if they just pumped it or like bought a bunch. But we can see right here the price to earnings is 104, meaning it's definitely undervalued. So even though we got Vanguard, Peter Schiff, we can't invest in this just because they don't have any sales. I know it's all about the IP, what they can own, what they have rights to, but it just doesn't equate to anything on paper, so we're gonna ditch it. I feel bad. Okay, this one looks like a penny stock. So this one is GORO, Gold Resource Corporation. Let's take a peek at their finance data points, financial data points. So they make 138 million. That sounds good. They lose 6 million. Okay, they have a little bit of wiggle room to lose. Forward price earnings show that it's potentially decently valued currently at 18.33. They have some cash. They have no debt. All right. Earnings per share next year, 131%. Earnings per share this year, minus 167. Earnings per share over the past 5 years is negative 18.7. And sales over the past 5 years are positive, so that's good. Institutions own 30%. Let's just confirm. Did I type in Goto? Nope, GORO. Institutions own 40%. That's huge. That's quite a difference. Gross margin 21%. That's great. They're almost profitable. Not quite yet. Okay. They have 87 million shares outstanding. So let's go ahead and do our quick math here. Since we can see that the market cap is under 1 billion, we are not going to do, we're not going to add the market cap. So if we add in 138.7 million minus 6.3 million, we're going to get 132. And the reason I'm shorthanding, you guys can't even see. The reason I'm shorthanding this is because these are all in millions, the sales income and the shares float. So when they're all the same denomination, I can shorthand. So we're left with 132, and we're going to divide that by 87.6. We're going to divide by 87.61, giving us a decent share price of $1.50. Okay. The stock is currently at $1.10. I think we found some value. So now that we've done this, let's reset this and let's add in the cash and divide by the shares float. So let's redo this. We're going to do 138.7 minus 6.3. And we're going to go look at the cash and add it. Balance sheet. They have 23.68 million in cash. Plus 23.68. Okay. And just really quickly, they have total assets 204 million, total liabilities 92 million. So that's about a 2-to-1 assets dwarfing liabilities, which is good. I like that. Total debt, we can see right here, 0. You guys can't see. Total debt right here is 0. I like this company. I would consider investing in this company, actually. Let's look at their revenue really quick. So total revenue for 2021, they made 125 million. 2022, 138 million. Gross profit is down. So that's good and all, but why that's a little off is because right here, you can see they paid 88 million to make 125 million. And then they paid 108 million to make 138 million. So 2021 had better margins. Operating expenses are really high right here. And net income is heading in the wrong direction. So not so good, actually. And just going back, their cash is reducing. I don't know what they're spending their cash on. Assets are kind of balanced. Total liabilities are also balanced. Yeah, I mean, it shot up from 2021. So, this is a fair price, in my opinion. I don't know if I would get into this one quite yet. Let's look at the pattern. I mean, this one's beaten down for sure. I mean, gosh. This has gone to $1 before and risen up to 7, and now it's down, up again. So what we're going to do actually really quick, I want to chart this out on Thinkorswim for a much clearer picture. I think this stock is currently underpriced. We have institutions at 40% ownership, which is 10% above what they're showing here, which is pretty huge. So yeah, we're just going to go ahead and wait for Thinkorswim to open. All right, so we are looking at ticker symbol GORO on Thinkorswim. And looking at this stock, it looks like I have charted this before. I don't remember when I charted this, but look at how accurate my lines were. I definitely did not chart it within the last 5-6 months. That is for sure. It looks like it bounced off this support here. Looks like we're in a descending wedge right here. So we're in a descending wedge. It looks like a bottom was put in here. We have two really strong candles, which you guys cannot see. I'm so sorry. Let me see if that works. Yes, kind of. Let's do a little more. I guess a little more. Okay. All right. So sorry for that. Right here, you can see two really high candles, which represent these 2 months here. So this had a pretty big sell-off. It looks like 24.8 million shares sold or transacted here. And right here was 28 million. So pretty crazy there. I don't see any dividends. Does this stock offer a dividend? GORO. It does. It offers a 3.64% dividend. Did it declare the dividend? Nope, they suspended their dividend program. So GORO suspended their dividend program. Just kind of not really good, but I think it's better for the company, but just does not look good. And if we just zoom out a little bit, we can see we had an all-time high run up of 31. It's come down here, fallen from grace, and now it is trading below historical support. So the next test is going to be $1.35. However, let's just do a little bit more charting here. However, I mean, that's so 134, or we'll see some resistance here on this upper band. This bottom band represents support, so we can see it broke through support here, bounced off support, 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 bounced off support. So we might see a throwback down here before a potential move up, but just considering the suspension of their dividend, they're at 7.3 million shares transacted so far. We're halfway through the month, so they'll probably get around 16 million shares traded this month unless something crazy happens. I don't know what the future of this company may be. I would look more into this company to see what's going on. Like, why did they suspend their dividend? So I like it, but just it requires more research. So let's see. I'm just going to note this one down. GORO. Decently priced, under valued, fair price around, I think it was $1.50. So yeah, I just need to do more research on that. So let's move on to the next stock. All right, you guys can see my screen. So this is ticker symbol HYMC, Hycroft Mining Holding Corporation. We're going to throw this one out because, just want to zoom in here. They are making $33 million, but they are losing $60 million. What's going on there? We have insiders selling 96% right here. Institutions are also selling. Let's just take a peek. What's going on with this company? Oh my gosh, their revenue went from 110 million to 33 million. Mudrick Capital Management has just been selling hundreds of thousands of shares. A director sold 5 million shares at $1.27. He got really lucky because the stock is at 51 cents. God, this just sounds like a nightmare. Let's look at the balance sheet. So they have 141 million in cash. Total assets 248 million. Total liabilities 185 million. Not the best ratio. Total debt 135 million. So they could use all their cash and pay off all their debt. But gosh, this just looks like a nightmare. So we're going to disqualify this one because they are losing more money than they're making. That is a horrible recipe for success. So we're going to say goodbye to this one. We have another Hycroft Mining Corporation. So this is literally the same one, just different ticker symbol. 33 million in sales, literally no other information. Yep, same situation, people selling. We're going to disqualify this one as well. All right, ticker symbol IAUX. I-80 Gold Corp. We can see the stock looks normal compared to the last two. Let's look at the financial data points. All right. The company has a market cap of 623 million. They do 36.9 million in sales. There's no debt data, no EPS, no guidance, no history, no gross margins. 135 million shares outstanding. Institutions own almost 50% of the stock. Let's just double check. So we're going to do IAUX. Yeah, so now it's at 50%. Why is this a new company? Let's see. It's been around for a little bit. So literally there's no data here. It's in Reno, Nevada. If we take the 36 million in sales and we divide it by the shares float, that's like less than $1 per share, and it's at $2 right now. So I don't like this, but we can see it's got a cup and handle. We have the cup here and then the handle down and going up. So we will see 289 minus $1.58, so $1.30. So this will probably get to around 380-ish. But I can't. This is just a no-go because there's no income. There's no data. So we're gonna disqualify this one. All right, next one up is Newmont Corporation. The stock is at $49. All right, let's do some math. All right, they have a big market cap. All right, so this one looks qualifiable. So they have a forward PE of 20.38, meaning in the future they'll be a little bit overvalued, but not too bad. They have a little debt. They're paying it off slowly, very slowly. Earnings per share over the past 5 years, negative 20%. Sales over the past 5 years, positive 10%. Insiders are selling a little bit, and institutions are selling a little bit. Let's calculate the fair stock price here. So we have billions in sales, and we have millions here and millions over here. So we're going to do everything longhand, and we're going to incorporate the market cap as well. So we're going to do 11,910,000,000. Yep. And we're going to do minus the income of 459 million. So that gives us 11.4 billion. And we're going to divide that by 792 million. 440,000, which is the shares over here. So a fair stock price is around $14. But again, we need to include the market cap, which is right here, and I did not do. So now let's go back to this 11.4 billion number here. All right. And we're going to add cash and remove debt. So this 11.4 is the sales plus the income, and the income is negative. So let's go down to cash and debt. They have 2.8 billion in cash. It's the lowest they've had in a few years. So plus 2.877. Yep, 2.877 billion. Yep. Okay. And we're going to remove the debt, which is 6.132 billion. Okay. So minus 6.132. So that gives us 8 billion. Okay. So just really quickly, they have total assets of 38.4 billion, total liabilities of 19.1 billion. That's about a 2-to-1 ratio right there. So 19 times 2 is 38. So a decent ratio of assets dwarfing liabilities. So we've incorporated the debt and cash. Now let's add the market cap of 39.36 billion to this right here. So 39.36 billion. And again, this is the market cap, which is right here. All right, so that gives us a total of, something got minused. What happened? So right here. So we did the, why am I confused? Why did I just get confused? So we did that minus the debt. Let's just confirm. 6.132 debt. Yep. And okay, so now we're going to take 8 billion. So we're going to add 39.36 billion. Okay, so 47.556 billion. Okay, so now we're going to divide this by the 792,440,000. So this gives us a share price of $60. Analysts have it at 56, so it's close. Right now it's at 49. So this is technically, I would say, undervalued given the market cap, which is going to fluctuate because, again, gold, momentum, etc. Let's just see how much insiders own. I'm sorry, institutions. Newmont Mining Corp, correct? Okay, so it says 89% here, and Finviz shows 82%. So that is good. That is really good. This is one of the better looking stocks, in my opinion, for US companies. And it's a 3.23% dividend. So it's undervalued dividend stock at the moment. I do not like that they are not profitable right here, but they're very close. And with gold rising, they should see some appreciation on their assets. So I like this company. It's trading at a valuation similar to 2016 and around 2013. So again, here's the cup, left side of the cup, right side of the cup, handle down, and we're just waiting for this candle right here to confirm. I would want to see a bullish candle here to see continuation, but at these prices, if you're a long-term investor in gold, this might not be a bad one. Let's see if Peter Schiff is in this one. So I'm just going to do a Control F and then Euro Pacific. Yeah. Nope, Euro Pac. Euro Pacific Management. Peter Schiff sold quite a bit, looks like. Yep. So Peter Schiff got out. So Peter Schiff had 316,000 shares, sold a little bit, and let's see what this column is. Okay. Change in percent. Oh no, it was down here. Value change 0.999%. So yeah, I think Peter Schiff still owns this. Looks like Raymond James added some right here. So I like this one. I'm going to add this to my list. NEM fair price equals 60, 3.2% div. So this company looks good to me. I like it. A little more research is always required. Please always do your own research. Talk to your financial advisor. Okay, so we looked at NEM. Now let's go to after NEM. We have PZG, RGLD, SSRM, USAU, and VGZ. All right, so the next one is PZG. Paramount Gold Nevada Corp. It is a penny stock. Let's see what's going on here. Well, we can see this one's a throwaway because, well, they make 300,000, but they're losing 6 million. They have a quick ratio of 0.3, meaning they're over leveraged. They have no long-term debt. Institutions own 7%. There are 38 million shares float. Let's just look at the bigger picture really quick. All right, this has been a very low stock since 2016. So let's just scroll down and see what's going on. We have a CEO buying $15,000 worth, which is not very convincing to me. Total revenue is just sparse, really. Pretty flat. Net income is going down, or it's going in the right direction towards zero-ish, kinda. They have 2.4 million in cash. They have 56 million in assets, 9 million in liabilities. It's a good ratio, but 4.2 million in debt. So yeah, I don't know how I feel about this one. Let's see if institutions are loading up here. Maybe they know something we don't. PZG. They own 8% of the company, and Finviz shows 7.5, so nothing cataclysmic. Gosh. Yeah, I mean, just not a good look. This is a really risky play. I would not get into this. So if you're thinking about it, I would do a little bit of research into this one. So yeah, we're gonna move on from this one. Next up is RGLD Royal Gold. Ooh, it's $141 stock. Nice. All right, this one looks really good. 600 million in sales, 239 million in income. Price to earnings says that it's overvalued. Future says it's overvalued. They have some cash. They have some debt that looks like they're not really paying off based off this snapshot. Earnings per share this year is 72%. Next year, guiding downward. Earnings per share over the past 5 years is 37%. That's really good. Sales positive as well, 5%. So this company seems actually stronger than we think. Insiders are selling a little bit. Institutions are buying. Gross margins, 83%. That's huge. They're very profitable. Low float stock, so this one can really move. Let's look at the price targets here. So, calculator. All right. So since it's a $9 billion market cap, we're going to go ahead and include it into the stock price. So we're going to do 603.20 million. Yep. And we're going to do plus 239 million. And then we're going to divide it by 65,470,000. So that alone gives us a $12 stock price. But again, we are not including the market cap. So let's go back to the 842 million right here. Okay, now we're going to go down and we're going to add in the cash and the debt, and then we're going to add the market cap. So total cash is 118 million. So plus 118,5900. All right, and the total debt is 500, so we're gonna minus 571, 570,000. Yep. All right, so we're at 389, and now we're gonna go up and add the market cap of plus 9,180,000,000. All right, so we are there, and now we're gonna divide this by 65,470,000. With a stock price of $146, and the stock is currently at 141. Analysts have it at 142, so I'm right up in the ballpark. Let's look at the overall bigger picture. Yeah, it's tapping its head on all-time highs. So let's see how much institutions own RGLD. Let's make it a surprise. Finviz says 82.5. I'm going to say it's 92 now. 107%. Huge. Huge. Crazy. Vanguard added. BlackRock added. Oh my goodness. You guys. I think we just found the best gold stock. The upside is low at the moment, but I mean, given that every year they're constantly hitting sales, I think this is gonna break to all-time highs. Let's see if I have a chart really quick. RGLD. I have done this one before. Okay. Yeah. Here's the cup. And it should come back down maybe. Goodness gracious. Yeah, overall not a bad stock to own. We can see it's gone one direction. Right here, throwback. Yep. It's been battling trying to break these highs over here. I like this one. I will need to do more research, as should anyone who's considering any type of investment. So, yeah, RGLD, great margins. Fair price equals 146. So, I mean, that's, I don't know, that's barely a gain. But if we're thinking of gold really moving, this is a 65 million share float, which means this could move really fast like butter. During the Great Lockdown, this went to $60, and then the next month it was up to 131. It went up 100% in a month. So yeah, this one can be very volatile. It was recently as low as 84. Now it's at 141. In a matter of 1, 2, 3, 4, 5, 6, 7, 8 months, it's gone up almost 100%. So do your own homework, do your own research, blah, blah, blah. I like this one. Let's move on to the next one. SSRM Mining. This is a $15 stock. Let's see if it's worth it. All right, so they make 1.15 billion. They have income of 194 million. That's healthy. That's good. Price earnings says this is fairly valued-ish, and forward price earnings say it's a little overvalued-ish. Quick ratio is 3.10, meaning they have some cash. Institutions own 68%. Insiders look like they're selling a little bit. Let's go ahead and do our treatment to this. So let's do 1,150 billion. Yep. Plus 194.10 million. Yep. And let's divide this by the shares float of 205,470,000. So based off of that alone, this is around a $6 stock. But given that this market cap is over $1 billion, let's now go back and add in cash and debt and then come back up here. So let's bring this back to our 134. And we're going to add in cash. So we're going down, down, down. 655 million cash. So plus 655. 45.0. All right, 1.9 bill, and we're going to remove any debt, which is 404,404,610. Yep, 404. Okay. And now let's go up and add the market cap of 3.25 billion. So we're going to do plus 325, make that a billion. Yep. And we're going to take this, divide it by our shares float of 205,470. All right, $23 stock, and this is trading at 15. That's a good margin right there. So this, I have this stock valued at 23.5. Analysts have it at 21.8. Who are you gonna believe? I don't know. I like this one a lot. Let's just go back and look at their revenues. Gone down a little bit. Gross profit reflecting that. Net income. Oh man, their net income took a hit. So I mean, with assets, with gold appreciating, this should help a lot of the gold companies, especially this one. This is a higher float stock of 205 million. So if we look at the bigger picture here, let's look at the Great Lockdown. So it went down to 945, and then within the next month, almost 100% gain there. So again, this one's kind of also pretty volatile. So again, do your own homework and research. I like this one. So SSRM, fair price equals 23. Do they have a dividend? They pay dividend, 1.77 div. All right. Yeah, I like this one. All right. Moving on down to our final two. US Gold Corp. No sales, negative income, a lot of cash, no gross margins, shares float is low. Oh my God, the stock was at 1600, now it's down to 4. This seems kind of like a sham company. I'm guessing this company does offerings and dilutions. Yep. 5 million direct offering. So we're gonna go ahead and we're not gonna consider this stock, just given that they have no sales, income is negative, you know, no gross margins. Just this is not our type of play. And the last US based gold stock is VGZ. It's trading at 63 cents. No sales, that's not good. Negative income. Quick ratio is 9.3. Let's take a look at the bigger picture here. Stock price used to be $5 or 5,000. No, $5. Okay. 114 million shares flow. That's not good. What's going on down here? No revenue. 8 million in cash. Total assets 10.9. Total liabilities 0.96. Huge difference there, but I mean the CFO is only buying $1,800 worth of stock at a time at the most, while we have the senior vice president selling 60,000, 18,000, 43,000. This company just looks like you know, I don't want to say the F word, but you know. So we're gonna cancel that one. So that brings us to our end of our video. So out of the 13 good stocks we had, there were about 1, 2, 3, 4, 5 good stocks. So do with that what you will. I enjoyed looking at these gold stocks in the US. If you want to see me review gold stocks in Canada or South Africa or whatever country, let me know. If you guys made it this far, please consider hitting the subscribe and the like button. And I hope you're doing well. I'll talk to you soon.